Let's talk rate rise on Cup Day. Well, there's been a development in just the last 15 minutes that makes this almost a fait accompli. The IMF has intervened. Joining me is business reporter Edward Boyd. Now, the IMF doesn't have power over the RBA board, but certainly, Ed, they'd be keeping a little eye on what the IMF has to say, or part of the puzzle, would you say?
Yeah, definitely part of the puzzle. Obviously, the IMF, International Monetary Fund, very credible source of information when it comes to the economy and what's happening all over the world.
Although, Ed, it should be said that they didn't foresee the global financial crisis, did they? And they're forever defending that.
Yeah, no. Look, they've got a few black marks on their record, just like a lot of different organisations out there. It's very hard making economic predictions. But look, it's pretty significant in the statement that they released about 15 minutes ago, basically talking about Australia's economy, having some growth targets for our economy for next year, but the critical info that the Reserve Bank wants to look at closely, and what lots of economic forecasters will see is the lines in their report basically talking about how the Reserve Bank has lifted the cash rate to bring down inflation, but there's still plenty of inflationary pressures in Australia's economy. And according to the IMF, they believe further interest rate rises will be needed to bring down inflation. So what are the big things adding to inflation? Well, the main one for the last few months has been oil prices being closing in on $100 a barrel. That's due to supply out of the Middle East being deliberately tightened up to push up the prices. So that's something that Australia, we can't really control how much we pay for oil, but obviously it filters through to fuel prices at the petrol bowser. Aussies paying more there. Also, fuel goes into transport costs. It costs more money to drive goods around the country. That pushes up the price of goods. So that's been a big thing, Laura, that's pushed up inflation. But the other big thing has been house prices and rental prices as well. So all those things together are causing inflation to be a lot stickier. That's the word that economists use. It's sticking around a lot more than anyone wants. And the IMF has now released this report on Australia's economy, and they think we need to have more interest rate rises to bring inflation down.
Yeah, sticky inflation, terrible term, but we'll go with it. Let's talk about house prices, because they are up almost 5% this year. Of course, as you mentioned, putting pressure on the Reserve Bank, but it's not right across the board. Of course, it's happening in Sydney, but not in all capitals.
Not in all capitals. So the one that really springs to mind is Melbourne, where prices have not got back to their peak, set a new peak. Prices in Sydney this month set a fresh peak. Property prices across the country, they're up about 5% this year. This is what's just happened in the month of October. You can see the median house price across Australia is about $759,000. But the growth there, 0.37, 0.3, 0.5%. It's pretty strong growth month on month. And we've seen that growth really for the last couple of months starting to accelerate a little bit more. And with property prices increasing, this chart shows from 2015 property price annual growth. And you can see there was really strong annual growth rate, almost 30% annual growth rate in some of the capital cities during 2021 to 2022. Then rates started rising. People stopped spending as much money as they did before, and property prices started to fall. But they're already back. They're already at a national rate. Nationally across the country have reached a new peak. But some cities are still lagging behind. Melbourne is one, Hobart is another, which hasn't reached its peak yet. But those are just basically anomalies in the rest of the system across Australia.
Okay. Do I dare ask about the market today? Or should we wait till later?
Look, no, the market has opened and it is actually up in early trade. The stock market has had a pretty tough time over the last couple of months. In fact, this week, it's set a fresh 12-month low. Lowest level in a year was on Tuesday. So the market hasn't been doing really too well recently. It's been around 6,800 points. Today, though, it is up in early trade. Wall Street was kind of flat overnight, but our market's lifted. So hopefully we're in a sort of positive start for the day and for the rest of the week.
Let's end on a positive note. Love that, Ed. Thanks so much. We'll see you soon.
Thanks, Laura.